Welcome to the morning call, ARMR Insiders. Thanks for joining me. We're going to get to what we always get to at 8:30. We start to order our thinking, get our day ready so we know how to trade when the bell rings. This is an exclusive video just for you guys, but what I think I might be doing with this video is releasing it to the YouTube wild after this. So bear with me for a second. Let me just do, as always, the intro so everybody watching this who's not an insider understands the process. So this is stock market investing with the ARMR Report. I'm Brett Rosenthal. I started the ARMR Report with the intention of bringing individual investors who are managing their own capital together with a flow of institutional information. And I'm trying to make it so it's easy to understand and easy to execute using that information flow. That's the purpose of what I'm doing here. We like to say that information makes money and institutions make markets. And so we take that flow and we get ourselves on the right side of probabilities over and over again when reward is worth the risk by following the ARMR investing way. So what I'm going to do this morning is share with all of you some thoughts on how we're looking at the market today. We're going to go over market direction, what our portfolios look like, what we think we're going to be doing with our portfolios. And then I want to share with you a thought on cryptocurrency investing that I think is imperative for you to understand and think about if you're going to commit capital to the space. Okay, so let's dive in first. The first thought of the day is to go over the market itself, all right? So we're going to look at the S&P 500. Oh yeah, by the way, before I dive in, don't forget, I'm not telling you what stocks to buy. I don't know you. I couldn't possibly give you that advice. I'm sharing my own personal experience, stocks that I buy. This is information I use to manage my own capital, right? We use algorithms to execute. I'm sharing that with you. All right, let's go. So we're looking at the S&P first, the S&P 500. This is an intraday chart of the S&P, okay? A daily chart of the S&P. So each bar is a day. We're in the Andrews Fork. We're climbing up this path. Now, we've been saying for the last, I guess, almost 2 weeks now, we need to build the ark before the flood. We need to begin preparing our portfolio for weakness in the market. I'm not going to go over the myriad reasons why. Okay, we don't have a lot of time right now this morning, but suffice it to say, anywhere you look in the market, there's excessive risk-taking going on. And when that happens, the ARMR investing way is to sell some into the strength, to raise our stops to protect ourselves, to begin carrying a cash position so that we're ready to take advantage of weakness. Sell in the strength, buy the weakness. So what we're looking for here is what we've been saying. When you're running through an uptrend, and you're as you can see right here, the S&P is following the uptrend, and it begins to fade and can't quite make that uptrend line. You know weakness is coming into the market. It doesn't mean the market can't keep going higher for a while, as it has, but you need to start building the arc. We had the first sell-off here. We said that was the shot across the bow, but the market found support at the 50 and rallied again. So here's another shot across the bow. Now, here's what I want to say this morning, okay? First of all, 2 down days in a row doesn't mean a thing. Market was down big yesterday. Looks like it might be down this morning. Okay. Now, I'm going to bastardize this, so the U.S. Marine Corps, please don't get upset with me, but it's something, it goes something like this, right? The first time you hear something, pay attention to it. The second time you hear something, coincidence. The third time you see something or hear something, the enemy is in your midst. So what we do on the ARMR Report, the ARMR investing way, is we say, look, 2 down days is nothing. That's just normal. That's just coincidence. It just happens in any uptrend. 3 down days in a row, and we have a problem. So today, we are going to follow the philosophy that we've raised cash before this has happened. We're in a position to buy stocks, our favorite names. We go to our whiteboard. We look at what's at the very top of our whiteboard. And if we get opportunities this morning, we're going to put some money to work. The key there is if we get opportunities, and we're going to use ARMR algorithms to execute. So if we see using ARMR day trading algorithms the right setups, we're going to put capital to work. Okay? So I think looking at different information flows, and gamma information is one of our favorite. And we just did an interview with the founder of Spot Gamma over the last week. And it's something I really think you all should take a peek at, because understanding gamma flows is a major institutional source of information that every investor should know and understand. Okay. So without going through the entire explanation, let's just say that 3,800 on the S&P is the line in the sand. The market can go down there and test it, and it's not a big deal. In fact, it could be a phenomenal entry point for the next leg higher. And so we're gonna err on the side of the trend is our friend. We expect the market to continue going up. It's having a normal pullback. Anything close to 3,800 gets interesting. Who knows? It might hold 3,860. We'll see today. Okay, so that's our stance. Where are we going to go with capital? Well, we started positioning yesterday the precious metal stocks, and we went with PSLV. Okay, so there's a serious breakout going on, possibly in silver. Now, let's avoid this one bar here. This was a Reddit hysteria bar. Okay, forget about that bar and just look at the rest of the chart. Silver is coming across key levels. This is SLV for those of you who would rather follow that asset. Okay, it's a major pennant breakout. It started yesterday. So we have a position on. SILJ, we have a position on. This is the small cap silver stocks. It started yesterday. We were buying this asset in the morning yesterday using the ARMR day trading way. Okay, which is a combination of using gamma information with an ARMR day trading trigger, and the two together can create explosive moves higher. And we had that yesterday. Okay, we added some shares of GDXJ. It hasn't even started yet. Okay, hasn't even gotten above the moving averages. We're way early there. All right, and what we'll do is broaden out the position. Why are we looking at the metals right now? We're always going to look at the metals. We are seeing ridiculous price movement in all kinds of assets. And yet, one of the largest short positions, one of the most suppressed assets is silver. If you look at the rest of the commodity complex, you're seeing up and to the right movement at a 45-degree angle. It's just a matter of time before silver and gold catch up with the rest of the commodity index. This would be a representation of inflation, right? And what we're getting on the flip side of inflation is a collapse in bond prices. Okay? Now, one of two things is going to happen to treasuries. It's either going to come back down to pre-pandemic lows and stop right there, which is exactly what the volatility index seems to be doing, VIX, or we have a bigger problem on our hands and treasuries are getting dumped around the world, and we're going to have a serious problem with inflation. And we don't know what that's going to be. We don't know. Okay? It goes hand in hand with this chart, which is the chart of the US dollar. We've been talking about this in our trading desk for a while. You have a head and shoulders top, a breakdown right here that's accelerated. Okay? Those type of patterns generally lead to a breakout in gold and silver. Trying to pinpoint when gold and silver is going to break out is very difficult, although we made a lot of money in precious metals last year. Okay? So when it hits big, and we're always searching for that entry point, and we use algorithms to do it, and we started putting capital work yesterday. So we'll continue to build that position on weakness this morning if we get the right day trading setup. ARMR Insiders, I'll see you all in the day trading room. I'll be sharing the screen, and we'll be going over that. So this brings me to my my last thought for you this morning before we split. and get ourselves ready for the trading session. Let me just say one thing before I do that. The part of the market that's getting hit right now are momentum stocks. You're not seeing this in the Dow yet. You're not really seeing it in the S&P yet. You're seeing biggest weakness in momentum stocks. This happened here. They tend to lead on the downside in an aggressive fashion for a couple days. Remember this 10% down day on a whole bunch of names that happened right here? Okay, but that didn't crater the market. You found support the next day, market charged higher. So this is why I'm saying to you, we're not willing to pull the plug on everything yet. But are we stuck with any of the momentum names? Well, a couple, but we've sold a lot of momentum names in the last week, right? I mean, a lot of them. We've lifted a lot of positions out of our portfolio that were momentum positions. And so we've avoided the chunk of this sell-off by rotating capital into positions like Altria, Disney, Levi's, okay? Things that are not, and of course, precious metals. So we've balanced our portfolio. We've got cash of somewhere in excess of 35%. We've got precious metals we've started to build. We've got some economy reopened names in the portfolio. So this is how you manage risk. So you're not overextended in the one group that's getting destroyed. Now, let's move on to the crypto conversation. I have a thought for you, and I want to share it with you. And I want you to really think about this. Okay? Full disclosure, I don't own cryptos anywhere. So if you wish, you could just turn this off right now because you're like, well, he missed an entire move. Okay, feel free to do that. What I want to share with you is that I'm not in it. I can see it from far away, and I can watch what's happening and share unbiased advice with you. And that's what I wish to do right now, to save you from pain if I can. And so I want you to think about this one thought. Before I get to that thought, why do I not own crypto? I believe when you're investing, if you're an investor, you have to find what you're really good at, and you have to focus on that and hit it as hard as you can. Okay? There's always something sexier on the news, in the paper, what your friend tells you at the bar. Okay? That's not how you make money over a long period of time chasing those ideas. You get really good at a process and you keep executing that process over and over again when reward's worth risk, and your net worth will follow. For me, I've been investing in stocks for over 30 years, and I'm really good at it. That's what I do best. I would rather put on big positions in what I do best than put on smaller positions in a bunch of names, in a bunch of assets, in a bunch of things that are not my bailiwick. That's why I've avoided crypto to this point. Will I ever get into cryptocurrencies? I may. I did a lot of research and work on them 3 years ago. Okay? And I continue to work on them. I may. There's a number of reasons why they make me uncomfortable. And so I'd rather make a lot of money in cannabis stocks, for instance. I don't need to make a lot of money in everything. I just need to see my net worth go up in a meaningful way, following a process in what I do best. Now, here's the thought I have for you that I want you to think about when you invest in crypto. One of the primary reasons that I focus on equities is that the Fed supports the stock market. This is not a new idea. This is Marty Zweig years ago. You don't fight the Fed. The Fed supports equities. The Fed's supporting equities in a major way right now. Doesn't mean the market can't drop 40% like it did last year on a pandemic. But then you get an announcement that the Fed is going to be buying corporate bonds, something they've never done in history. ETFs. And so we use ARMR algorithms to execute, right? So last year, February 24th, we went to 100% cash that week. That was literally almost the very top of the stock market. And we put that capital back to work late March, which was the bottom of the market. Now, that doesn't happen all the time. The ARMR Report's not always that great, okay? That was a unique year for us. But why did we do that? It was easy to understand for us. Information makes money, and institutions make markets. Institutions put capital to work when the Fed says they're buying everything in sight. That was the information you needed to know. That's what you needed to understand. The Fed's buying corporate bonds, the market's going up. It doesn't make a difference about a pandemic. It doesn't make a difference about the economy closing. None of those fears mattered. Okay, I understand this. I know how to manage capital when it comes to equity markets. I put money to work. There's a plunge protection team for equities, the stock market. It was created after the crash in 1987. The whole point is circuit breakers and protection so the market can't drop 20% or 25% overnight. Gives you a chance to think as an investor, gives you a chance to protect yourself, all kinds of things you can do to protect your net worth. This is the thought for you today. Cryptocurrencies have zero Fed support. They have zero plunge protection teams. They can drop 20 or 30% in a 48-hour period for no reason. I'm not saying you can't invest in them. Make all the money you want, but you live by the sword and you die by the sword. I'm asking you to understand what it is you own. Okay? Understand what it is you own. There is no safety net to protect your assets. You go to bed at night, you wake up in the morning, the entire asset's down 12%. Okay? I'm not saying you can't do it, but just understand what it is you're doing. In a lot of these cryptos, you are in Vegas. Okay? But at least when you're in Vegas and you lose 50,000, you walk away and you have a story and you tell people you had a great weekend and you had so much fun. Okay? And things that happened in Vegas stayed in Vegas. Okay? There's nothing fun about getting wiped out in a cryptocurrency that's a total scam. I'm not talking about Bitcoin. It's a real thing. I get it. Even though it's down 12% this morning, I'm sure it'll recover. I'm just saying, recognize the asset you're trading. This is not an investment. Now, is Bitcoin an investment over a long period of time? Perhaps. But I have a lot of people showing me new crypto coins. This will be the next Bitcoin. Man, good luck with that. Okay? If you want to try it, go for it. But please, please don't commit your entire capital base to that. You've got to manage your risk. You've worked too hard for the money that you've earned. Recognize there's no safety net. Okay? That's my thought for you. So tread, but tread lightly. I hope you find this helpful. I wish you all a great trading session, ARMR Insiders. I'll see you at 9:20 for our live day trade setup. Take care, guys.